Good morning, everybody. It's Friday, August 16th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down 4 3/4 at 392 1/4. November soybeans were down 8 at 960 1/2, and December Chicago wheat was down 3 1/4 at 547. Yesterday, at about 11 o'clock, we had NOPA Crush come out, 182.9 million bushels. That was sharply higher than the estimate of 182.4. That's the largest on record for the month. And then oil stocks were sharply below estimates, 1.5 billion pounds. They were looking for 1.6. Good morning, fellas. We're going to put a bow on this week. We were talking a little bit before the show, and Ben, maybe just a few thoughts to kick us off. But the, December corn, by all accounts, posting that reversal and not being able to hold is a pretty nasty sign. So we'll have to see how we finish out, obviously, here today. But just, I guess, a couple thoughts, Ben, and we'll kick it around the room.
Yeah, I think this morning bears watching pretty closely. Not uncommon to retrace a lot of a key reversal like that and then solidify yourself and bounce, or take it out and completely negate it. And we're kind of there in corn. Beans hovering right above their recent lows. Overnight rains were pretty good across a lot of places, kind of sending the message, I think, that big crops get bigger. And a producer who's still, by all accounts, sitting on quite a bit of an old crop still. And I think that if you read the commentary yesterday, I think Dustin spelled it out really good for you. We could be oversubscribed to this, and we could be undersubscribed to this. And I know that sounds kind of Switzerlandy, but the truth is, we have seen in markets when you get into the delivery period towards first notice day, it's going to tell you whether or not it's been oversubscribed or not. And if you're in that position, I would say talk to your advisor and find out some sort of a plan that's going to give you time for price appreciation. And and back to the old adage of sometimes the best trade you can ever make is getting out of a bad trade, and replace that, especially if you're going to have to roll. If you're going to have to roll again and take the negative hit on the spread, or you're going to start picking up DP charges in September, you got to weigh the cost of that versus potential re-ownership on paper. So, not doing something, you got a 50-50 chance of putting a lot more harm onto yourself. And a defined plan, you've at least stopped the bleed and can buy yourself some time. So that's kind of my thoughts. I will be very interested to see if corn can hold this morning. As much as I would like to see a rally, it doesn't feel to me like it wants to come, but it's at a place now where it can grab hold if it can keep the lows from the other day and run back up to the top of the range and see what it wants to do.
That's very good. Dustin, maybe just a few thoughts, on your mind as we wrap the week and put a bow on the green side.
Yeah, this is like to echo Ben's comments, like the worst time of the year, a lot of times, because you're grappling with like the clean out of old crop bushels and also discovery of the new crop bushels, which appear to be a record. So you've got, like, in a sense, it could be peak bearishness, where people are saying, what am I going to do? I still have old crop to sell, and I'll get this massive new crop coming, right? That gets a lot of motivation to sell all of a sudden and clean out those bins. And that's the cues that we're getting from both flat price and the spread. So September to December traded down to 22 cents on settle yesterday. We are CME warehouse receipts are about 8 cents a month. So, full cost of those receipts at least would be like 24 cents to get to December. If you're talking about like earning an interest at the risk-free rate, you need to be closer to like almost 30 cents right now, maybe a little underneath that. But that just shows, that there's plenty of supply coming to the market right now prior to that September 1st notice day. and they feel flush with it. What does it do for harvest basis? I think there's a lot of concern out there that there's going to be enough carried in and also in the commercial hands, and also that we're going to have an oversupply of what can't fit in the bin on farm, and there would be easy pickings for harvest basis on the commercial side. So that's something to kind of consider if you are in that spot where you've got bushels you don't have room for. Where are they going to go? How is that going to go? Is it going to go in the bag, or is it going to go to a harvest basis? Try to map that out. Should be a good carry year. So your ability to capture a carry should be pretty good, just based on where spreads are right now. But we're still a ways away from where carry rates got to last year at first notice day. So December first notice day is end of November. Any bushel that gets put onto DP, or more so puts onto basis only for December, that needs to be rolled by that end of November first notice day. Last year, Dees July got to 48.5 under on settle. You look at right now, we're at 36 under. So it'd be interesting to see how that spread materializes as we get into November. If there's any sort of strength in that, you might want to be considering spread risk on basis only. So we can talk more about that individually if you want.
And just to add on the spreads, I'm pretty interested to see where Sep-Dec goes here into the end of the month. I think that's going to be a pretty good barometer for what we're going to be looking at for spreads. It's the same Sep-Dec as Dec to March. We're trading 22-ish Sep-Dec, and Dec March is still trading, what is that, 18-ish, 19 it looks like maybe this morning. So spreads are moving out. That's sending the message that we're ample. There are going to be some space issues in the East because I know that commercials are working really hard to try to find space for the fall, but they keep getting hit with lots and lots of corn. And ultimately, that's going to force them to expand some ground piles. And when they have to do that, they take their risk off on basis because they know that they're going to lose a higher percentage through damage when they put it out on the ground. And, I definitely think you if you're sitting on your hands waiting for basis to get better into fall, I think the odds are stacked strongly against you that that's probably not going to happen. Encouraging though, there has been some business booked to the southeast, to a lot of the chicken farms down there. So that is encouraging for people in the Eastern Corn Belt, but I don't think it helps us much for the fall.
Yeah, and if I could just kind of illustrate this a little bit with a screen share too, like history of our perception of old crop supply. So if we look at this drop right here, that's the June 28th report. We had a pretty bearish report. It was a June 1st stocks count that was much larger than expected. So we have Sep-Dec drop from 11.25 to 13.25. And then, we have this really weird WASDE report in July where they took that stocks data and then they went the other way with it. They actually lowered carry in on perception that we're going to have less supply carried into 24 than we expected. Absolutely insane to see that. It was a weird thing for them to post. And then they doubled down on the same thing in the August WASDE report. They lowered the carry in even more, even though stocks said something else. So that's something that we actually have to worry about on the September 30th stocks report is what do they do with carry in? Are they going to have to revise that when they actually count this and it ends up being, more reflective of the stocks count in June, which is higher than what the WASDE report, in my opinion, would be showing.
Yeah. What do you think of that number then?
I don't exactly. I guess I just don't know why they'd post that. Like they've got a glaring data point that says there's more supply carried in on farm, and then they just like, we're going to ignore that and just write down a different number. It was really weird. That's why I'm kind of saying that's something that we still have to figure out. Based on how the spreads are reacting right now, I would say the June stocks report seems to be more accurate, right? Like there were a lot of bushels on farm that needed to come to the market. That's what the market's saying right now, at least. So, but like, look at this though, like that Sep-Dec spread after that June WASDE report jumps all the way up to 7 under, right? We had a stocks number that said something completely different, and the market blew out of something there. And now we're down to 22 under as of yesterday. So 7 under to 22 under is just a crazy move in Sep-Dec spread in that amount of time. So the market, I think, is definitely coming to realization that there's a lot of bushels that are moving, and that's what that spread did there, collapsed into the end.
I saw barge rates increase too, so there is movement, and on heading south, right? Ben, anything to note on that? Have you been watching that?
Yeah, I think that we're at a great price to do business. I think that when you see the export sales that we saw yesterday, that having been through a couple bear markets, we think there's going to be this one kind of magical carrot that reverses markets, and we get export sales, and you'll continue to break until there's enough that people get concerned. We saw this in beans in 20. It's happened multiple times over the years in corn, and I think we're getting to a kind of a critical point here where either we've got to dig our heels in and say we factored in a lot of the bearishness, or we're going to go lower, and we're going to go lower to find more business. That's what we have to do to clear tremendous amount of corn. And you couple that with a lot of unpriced old crop corn, and that's what we've been trading. And I think Dustin did a tremendous job. Sometimes these things can be oversubscribed, right? The old story of the Great Depression. Before the Great Depression, the one guy that was the secretary or whatever sold all of his holdings before the market crashed, and someone asked him how he knew, and he said, "The shoeshine boy told me that I should be buying this stock." Right? It's the same thing in commodities. How oversubscribed is this trade? Are we pushing it underwater to a point that's not reasonable? And a lot of times, you will find that out within a few days of first notice. So I guess I feel like that the bleed is not over yet, but I would be very conscious of people being too short going into that and finding a vacuum of offers on the upside.
Very good. Got a couple minutes here before we come into the open. Ryland, we were talking a little bit before the show here this morning. Vice President Harris is supposed to announce later today, federal ban on corporate price gouging as part of her stance going forward. And I guess the first thing that caught my attention was her expected focus in the meat industry. So maybe a few thoughts on what you're hearing there, some of the reaction, and then put a bow on livestock for the week.
Yeah, it seemed like we got a little bit of that yesterday, that with the meat prices getting highlighted on the political spectrum. I mean, obviously grocery prices in general are high, but I mean, there's no question beef is, kind of the standout here. I mean, year to date, average beef values at $7.94 a pound. It's up almost $2 a pound since 2019. So this has been a massive move, and obviously, like, we've seen things like poultry and pork still come down here, and we're also seeing even some of the larger packing industries, JBS, Tyson, all have kind of cited beef as being kind of the laggard on their profitability, or at least hurting their margins. So it's a talking point. I don't know exactly how they're going to enact any kind of price controls on the grocery section, aside from maybe going after the retailers and looking at their margins. I mean, I would imagine that some kind of subsidy would have to follow either on the consumer end or on that side of the business to really kind of actually try to control it. But it seems a little bit like a pipe dream. I think there's a lot of problems with government trying to control price, and we've seen that historically, over the years. So I don't think anything's really going to come of it. I think it's a great stance to run on, just because it's something we all agree on. We would all love cheaper beef retail wise, but it does put it in focus. Maybe that does put a little bit more pressure on retailers. So we'll see how it kind of shakes out. I don't think there's going to be any immediate change, but the devil's going to be in the details if she actually has some legislation that's going to support that.
Very good. With that being said, Brian is traveling today. So it is Friday, and we will continue the tradition of Fun Fact Friday. Ryland, you get another shot at it here. So
Yeah.
best of luck.
Well, it's August 16th, which of course is National Rum Day. So, I was kind of fascinated by that because I think everybody could appreciate a stiff drink after what we've all seen as far as the grain markets go. So, it was such a valuable item in the 18th century that it was used in commercial exchanges. So, English privateers used it to trade. So, sailors actually received barrels of rum as a form of payment in their benefits package. So I think we could start a trend here if we really want to kind of bring that back. Just throwing it out there for all the anybody that's looking for a new job here. But it was also used as a medicine in the early 19th century. Physicians used to prescribe alcoholic beverages such as rum for all sorts of medical treatments like snake bites. And pirates even used it to treat scurvy. So sadly, the medical community came out in the right around 1917 and just said that they don't believe that the use of alcohol is prudent in terms of therapy. So they pretty much just said it's got no scientific value, and they're not really going to recommend that to treat those kind of diseases, which is sad. But maybe we can bring that back a little bit just for the weekend.
There's people that still subscribe to that theory.
Yeah, I'm sure there's some people that still are on board with that. So
very good. Appreciate it, buddy. Thanks for that. I hope everybody enjoys a nice rum and Coke or whatever your preference is here this weekend. That'll wrap us up for the week. If you enjoyed the show as much as we enjoyed putting it out, give us a like and subscribe. Helps us out. It'll give you access to premium content, keep you posted on all things AgYield. Doesn't cost you anything to do it. So please give us a like and subscribe. We certainly appreciate everybody that tunes in on a daily basis. We are streaming live every day that the markets are open at 8:15 Central Time on X, Facebook Live, and YouTube Live. Thanks for all the comments here today, guys. The thoughts and comments. It was a good show. Hope everybody has a great weekend, and we look forward to talking to you again next week.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.